In my opinion, current central bank rate not have negative impact on credit rates on the market, because the more important thing for the market is forward guidance or expectation regarding forthcoming policy of the central bank. Currently, the consensus is that central bank continue with downward trend regarding the key rate, and it's highly expected that before the end of the year, central bank will decrease key rate by at least 100 basis points. So, as you know, currently the CPI rate is quite low. It's historically low. It's only 4.6%. And if we speak about key rate, it's 10%. That means that real effective rate is quite high currently. It's more than 5%. It's not that good for the economy, of course, but it helps central bank to fight inflation expectation. It's the main issue for central bank, as we could understand from the central bank representative speech on the conference. So, because if we speak about current key rate and given central bank target that key rate should be 3% higher than current inflation rate, that means that currently key rate could be between 7 and 8%, but really it's 10. That means we should put this premium central bank to fight inflation expectation. It's the main issue for central bank. I think that this target is quite feasible for central bank. Now we have only 60 basis points left, and it's quite achievable. In my opinion, the matter is if central bank would be possible to keep inflation at the same level for a longer period of time. Because, you know, we are living in the quite changeable macroeconomic situation, and the matter is that not the interest rate itself, but how stable it will be, so in terms of tenor. That's the matter. Because if we speak about, for example, low investment consumption on the market, they need stable situation. During last year, the ruble was stable. It's one thing. Now the market is expected that interest rate will be relatively stable also. I think that the local debt capital market is quite strong and healthy, and it will develop this year and the next year. First of all, due to prudent fiscal and monetary policy of central bank and the Ministry of Finance. The fact that the Ministry of Finance is going to substantially increase the supply of local government bond, it's not an issue for the corporate market, because they are also developing simultaneously. And if the infrastructure of the market and if the market will be representative, so the capital market for corporate will be favorable also. Because first of all, the Ministry of Finance builds so-called yield curve of government bonds. You know that all corporate bonds are priced in comparison with this. If this yield will be long and stay competitive, it will be very good for corporates, because currently, as I could see, big Russian corporates consider a local market as more preferable in comparison with international market. Not only due to sanction, but due to conditions, because they could reach, in terms of price, they could reach more cheaper funding here on the local market, and then, for example, use a fixed swap to convert this funding into dollars. Because you know that credit default swaps for Russia, it's at pre-crisis level, but it's around 170, 180. So if you place Eurobonds, for example, you should pay this trans-border premium. If you place your bonds on the local market, you don't pay this trans-border premium. So it's a great thing for Russian corporate names. As I could see from Mr. Vyshikovsky's speech, we try to diversify local capital market not only in terms of different types of ruble-nominated instruments, but mainly with instruments nominated in foreign currencies. So they spoke about Chinese yuan nominated bonds. We know that last year they placed dollar-nominated euro bonds on the local market, and my expectation is that the Ministry of Finance will continue to use local infrastructure to place external debt also. And first of all, it's important step to make financial center from Moscow, and of course, if more foreign investors will use Moscow exchange, for example, as a floor for this placement, it will be good and thing for the Russian economy also. First of all, currently Russian market is very attractive for foreign investors due to high carry rate, because you know the difference between the local rate, I mean in ruble interest rate, and rates on international market, especially in euro, is quite high. It's 9–10%, and the Russian risk is relatively low, as I said before, so that allow them to get benefit from investment into Russian market. So the policy of Russian government and central bank seems to be quite predictable and prudent. So that's another factor which could be used by foreign investor to reduce their credit risk and to change all in all perception of Russian economy and Russian corporate risk also. And the other thing is that infrastructure of local market is always developing, and we could see that currently, for example, Euroclear and Clearstream are working on the local market, and it's a window for foreign investor to enter into the local market and to use it as opportunity to invest. So that's why I think all these steps, and we have a program, of course, we have a program on the government level how to develop all those investment infrastructure and to reach the target and create one of the financial center here on the local market. It could be, it could develop more faster if this project of, for example, Silk Way from China or Eurasia Union will develop also on the base of the capital market which created here in Moscow. It's another circle of investors. It's another opportunities, for example, for countries which are going to cooperate with this unit, I mean Eurasia unit, and with or take part in this Silk Way project, for example.